Mr. Speaker, I would like to draw your attention to our tax system in Kenya. Our tax revenue as a share of our GDP has remained consistently at approximately 15%. This stagnation is a cause of concern to the Committee of Finance and National Planning, and this is some of the issues that this particular bill, Honorable Speaker, wanted to address. In comparison, Honorable Speaker, with several African countries, Botswana's tax revenue per GDP is at 24%. Mauritius is at 18%. Zambia's is 17%. But Honorable Speakers, ours has remained consistent at 13% as of 2021. These countries, Honorable Speaker, have managed to achieve higher tax revenue collection rates. The disparity highlights, Honorable Speaker, is a need for us to reassess our tax policy and explore more effective ways of enhancing revenue mobilization. Honorable Speaker, I would like to talk about our economy for the past decade. We have witnessed an evolution in our economy with the emergences of employment opportunities in the digital market space. Additionally, a majority of jobs have been created during this period and have been in the informal sector, employing approximately 80% or 18 million shillings of our Kenyans in 2021. Mr. Speaker, the Finance Bill of 2023 had several tax proposals that will enable the country to increase its tax base, essentially increasing its revenues. The committee carried out the public participation and deliberated on the matters which informed the following decisions. For instance, Clause 2, which deals with the definition of terms, Honorable Speaker, had the definition of winnings when it came to the betting sector, Mr. Speaker. Something that we addressed, and the bill now try to tighten up on those particular winnings so that it doesn't lead to loss of revenues to the government of Kenya, Honorable Speaker, and also it doesn't crowd out potential businesses to live and go and set base outside this country, Mr. Speaker. Clause 5 of the bill suggests imposition, Mr. Speaker. Clause 5 of the bill suggests imposition of taxes on club entrances and subscription fees for employees. However, if it's implemented, this would result in double taxation, as both the employee and the employer would be taxed on these fees. In response to this concern, the committee made the changes to the clause, allowing that the taxation to be applied only for the employer's income instead. Clause 10, Honorable Speaker, of the proposed registration introduced a new tax called the digital asset tax, specifically targeting the taxation of profits generated from digital assets such as cryptocurrencies and non-fungible assets, the one we call NFTs. Many stakeholders expressed their desire to have this proposal removed as they believed it would discourage traders. However, the committee noted that the reason for setting up the tax rate of 3% of the gross turnover is to facilitate compliance and for trading, and also for simplifying the process. It will note, Honorable Speaker, that Kenya becomes now, if this bill passes as amended, Honorable Speaker, becomes one of the first countries in the region to recognize cryptocurrencies and digital assets and bitcoins as a way of a form of payment, as a form of trade, and therefore generating revenue from these particular digital assets, Honorable Speaker. The committee observed that Clause 12 that restricts expenses without ETIMS invoices as complemented by Clause 57. This would exempt individuals from registering in the electronic system management system. The exemption ensures that small traders, the one we popularly known as mamambogas, and those that are in the informal sector are not negatively impacted by this particular proposal. Additionally, therefore, the commissioner we have proposed will ensure administrative guidelines to address any concerns regarding the implementation of this system. But we have uploaded that there is a need to have every trader and every business person in the country operate within the ETIMS system, Honorable Speaker, and this we realize will enhance both revenue collection and reduce the cost of tax administration. Honorable Speaker, stakeholders expressed their concerns on Clause 20, which would require that withholding taxes be remitted to the Kenya Revenue Authority within 24 hours. They believed that this timeline was too short and would result in additional administrative expenses, Honorable Speaker. But The proposal here, Honorable Speaker, we have had many institutions, many companies that withhold whether it's excise duty or VAT, that means they are agents for the collection of these particular taxes, had up to 50 days before they remitted these particular payments to the Kenya Revenue Authority. So, Honorable Speaker, we noticed that by them getting 50 days of these taxes, it means these businesses were being funded through their working capital by taxpayers' money, Honorable Speaker. But again, from having between 20 and 50 days to remit these monies to KRA to under 24 hours, we found that 24 hours was a little too ambitious, and the committee amended that and said we would allow that these businesses can remit these particular taxes within 5 working days. The key word here, working Honorable Speaker, also takes care of the complexities of weekends and work. Honorable Speaker, Clause 24 was one other very contested by many stakeholders. They were concerned about the proposal to increase pay rate for individuals earning more than 500,000 shillings. And Honorable Speaker, having really considered this, we found also that our tax bands have not been amended for years. And part of our recommendation, even if you're not able to make this particular amendment in this particular bill, Honorable Speaker, there is need to revise our tax bands for pay because they have not been revised for very many years. But Honorable Speaker, we suggested instead of having the 35% only accrue from 500,000 shillings to above, we add an additional tax band of 500,000 shillings to 800,000 shillings to be charged at a pay rate of 32.5%, and those earning more than 800,000 to be taxed at a rate of 35%, Honorable Speaker. Clause 24 introduced digital content monetization at a withholding tax of 15%. However, we noticed that this is, if you compare the withholding tax on other professions, whether it's legal fees, accounting fees, management fees, and all the other professional fees, withholding tax on all these particular fees is at 3%, Honorable Speaker. And that is why we found that charging digital content creators at 500% more was unfair and punitive to this very, very growing sector, and we propose that this withholding tax be reduced to 3% withholding tax, Honorable Speaker. And it's good also, Honorable Speaker, to appreciate the expansion of this particular sector. We have got very, very many Kenyans, especially young Kenyans, who are exerting very, very well on this space. But some people are asking us, then why are we taxing us? I'd like to remind our digital content creators, Honorable Speaker, the teachers that got employed recently that earn an income of 30,000 shillings per month, Honorable Speaker, they pay their rightful share of tax. The nurses that help our mothers deliver in our hospitals, or the nurses that treat our old relatives and the old people in home-based care, pay their rightful share of tax. The doctors that work day and night to save lives of this particular country, the emergency attendants that work in our ambulances, pay their rightful share of taxes, Honorable Speaker. So we are really asking, we are not asking you to pay 15% or digital content creators, that is too much, but we are going to politely ask you to pay 3% withholding tax so that we can generate revenue to connect other people to the national grid of electricity in our villages so that they can also get a chance to also participate in this sector that you are in, Honorable Speaker. And I like the introduction of this has also opened a national dialogue about digital content creators. And they came and told us, now, next time we want you to incentivize us by reducing the prices of our cameras, of the video cameras that we use to generate this content, Mr. Speaker. And views that we have taken seriously as a committee, we will endeavor now to carry them on in our next report, Mr. Speaker. Clause 28 of the proposed increase of VAT on petroleum and liquefied petroleum gas from 8% to 16%, Honorable Speaker, was a very contended issue, Honorable Speaker. But what has the committee done? Honorable Speaker, when we put the VAT on fuel at 8% and every vertible product at 16%, so what that meant, Honorable Speaker, that these particular businesses in this particular sector were always in a VAT credit refund position, because their input tax, Honorable Speaker, they're able to pay their VAT on input at 16%. But fuel at 8%, Honorable Speaker, it means there's an 8% difference, which means that these particular businesses have always been on a credit side when they're asking for tax refund, Mr. Speaker. And what that essentially means is that taxpayers' money have been used to finance these businesses that carry out the business of this of fuel.